What if just one thing could bring the final crash for markets, the crash that cuts your portfolio by 50% again? And what if it's not just any one thing, but actually a whole bunch of high-risk global events, any one of which can completely devastate markets? Well, welcome to 2022, because right now we are facing insane risks to markets, insane risks to the global economy, and you as an investor must keep up to date on this madness. So let's talk about exactly that today in this video. I'm Lark, I make videos on investing. If you like that topic, please subscribe to the channel, leave a thumbs up to let me know you do like this kind of content. By the way, make sure to sign up for my free twice weekly crypto investor report down below in the description. Our members love it. I'm sure you will too, so check it out. So let's start off with the war in Ukraine. The conflict has gone from bad to worse over the last few months. A constant stream of NATO weapons and NATO mercenaries flooding into the country has put a lot of pressure on Moscow, who is now forcibly conscripting 300,000 people to send into the war. By the way, the continuation of this war, which seems far from over, also means a continued disruption to global food markets, fertilizer markets, energy markets, metal markets, not to mention the very real threat of military escalation beyond Ukraine as both NATO and Moscow increase their deeply dangerous rhetoric surrounding a potential nuclear conflict. I guess we're not gonna need to worry about our portfolios if we're all dead. Hashtag silver linings, right? Oh gosh. Anyway, next let's talk about global real estate market slumps. U.S. markets are cooling hard and fast. Ratings agency Moody's is calling for a potential 15 to 20% cool down in USA's most overheated housing markets. Now this map here shows the extent to which markets are overvalued. They say that 210 cities could face extreme price declines, and it's not just the USA. Many markets are being affected, like here in New Zealand or across the water in Australia, over in Canada. If we see a global decline of 20% on average in property prices, that'll be an $80 trillion loss in equity for homeowners globally, since real estate is around a $400 trillion, or was a $400 trillion market cap asset class. Real estate is the single biggest asset class on earth. It's also where most people have most of their wealth stored. On average, 66% of a family's net worth is in their home. The knock-on effects from this market slump in real estate will be massive. Next, let's talk about Europe's energy crisis. Well, it makes big headlines to say people are going to be freezing to death in their homes this winter, and well, that could happen to some people. The real impact comes from how this is going to crush business in Europe. There have been widespread reports of businesses, both big and small, closing. For example, this metal producer in Germany, which is closing, or thousands of pubs across the UK, which may have to close because they can't afford energy bills. Thus, this crisis could create a crushing unemployment crisis, which is the worst time to have it when everyone can't already pay for things. And with recessions already inbound for the UK and many EU economies, the stakes are super high right now, and I think we could potentially even see huge money printing in the Eurozone and in the UK to combat this situation. Now let's talk about the Japanese currency crisis, our next big problem. The third biggest economy in the world has been getting hit hard. We don't often talk about Japan, but Japan right now is facing a raft of major problems that will lead to its slow decline. It's got a major population decline underway right now. It is beholden, of course, to global energy markets as a major importer of energy. Thus, a weakening yen makes energy prices a constant struggle as the dollar continues to rally. And it can do little to intervene, the Japanese central bank, by raising rates due to the massive existing debt in Japan. Japan is facing a tough situation here, and it may be forced to completely debase the yen. And to be clear, the third largest economy facing this kind of pressure could result in global contagion, global knock-on effects. And a strong dollar has been putting heavy pressure on many global currencies, not just the Japanese yen, the euro, the British pound getting smashed over the last week or so. So it's not just a yen problem. Global forex markets are in turmoil right now, the kind of turmoil that can cause something to snap, something to break. The only question is what is going to break first. Then there's the Chinese economic crisis, the next big topic to keep an eye on. This is an extensive topic. It's very detailed. We talk about property market instability, the insane zero COVID lockdown policies, ongoing supply chain issues. China is the world's factory, right? The ever-present issue of Taiwan, which the USA has recently been putting new pressure on Beijing over with new rafts of sanctions, new military aid packages to Taiwan. All of that putting pressure on the Chinese yuan during a period of massive dollar strength. China, the world's second biggest economy and the producer of, well, most of what the world needs and wants, is facing a very tough time. And an economic crisis there can and will have far-reaching impacts, just like if it happens in Japan. Now let's talk about bonds. Boring, old bonds. They represent about $120 trillion market cap globally, compared to something like stocks, which is around 90 trillion globally. So bonds are big, bonds are breaking, and it's not pretty. This chart here shows that we recently experienced the second worst day for bonds since 2008 when we had the global financial crisis. The Fed is steering the economy not to even a hard landing at this point, it seems, but like a full-on fireball explosion level, just crash. This chart here shows that bonds have lost $12.2 trillion from their all-time high. That, for reference, is about 37 times bigger than the entire market cap of Bitcoin. A lot of losses, man. By the way, US bonds are likely facing their worst year in history. Remember, bonds are the second biggest asset class after real estate. And bonds, unlike most everything else, was supposed to be a relatively safe investment. But there are no safe investments right now. There are no safe havens in this financial crisis. It's the everything crash. And finally, of course, we have to talk about global contagion in emerging markets. Spent a lot of time talking about the big economies, but a super strong dollar is bad for everyone, because the dollar, for better or worse, does remain the global reserve currency. And most oil trades are still priced in dollars. So that means local currencies are all getting wrecked. And while the new lows of the euro and the British pound are making the headlines because of the importance of those currencies in the forex markets, many currencies, including Indian rupee, the Turkish lira, the Argentine peso, they've just been crushed. Absolutely crushed. It's crazy. And unlike the USA, these countries cannot just print their way out of trouble. This situation means that food prices and energy prices will continue to rise for people in these countries. And inflation and debt had already stretched many people in these countries to the edge of oblivion, all of which compounds into creating more crisis globally, refugees, supply chain issues, more inflation woes, more human suffering, and just more chaos. So yeah, it's getting pretty bad out there, guys. And well, I don't want to be a downer here. You are doing yourself no favors by pretending that all of this is not happening. And as mentioned, any one of these stories can bring the whole damn global economy tumbling down to its knees. And they all are happening together at the same time, because that is the globalized world. We can't have things happen in one place without having effects in the other place. A massive global recession may be underway. But just as up-only season doesn't last forever, neither will down-only season. And though things are probably going to get worse before they get better, just know that markets will bounce back. It only becomes a question of how long it takes for markets to recover from all the trauma that we're going through right now. Personally, I'm staying dialed in to what is happening in the markets, to what's happening in crypto, to what's happening in stocks. I'm going to keep investing. And while some are now calling for a lost decade, the end of all things, I think there's too much happening innovation-wise for that to be the most likely outcome. But hey, maybe I'm wrong. Been wrong plenty of times before on plenty of stuff. But anyway, let me know what you think about all this down below in the comment section. Curious to hear your opinions as always. Thanks so much for watching today's video, and peace out till next time.